Heavy is the head that has to manage all of this.
Hey everyone, welcome back to my channel.
We're now incentivized to buy what we already buy.
Fumbling through college had me building.
I also got some done on the other side.
And that was right around, I would say, May, maybe, right before renewing the lease for this property.
Welcome to the channel, Martha.
Thank you for having me here.
Oh, I was going to say, I am getting up there in age, I'll tell you what.
Bills paid by other people, life was never this good. I had to step back.
Everyone, so like I promised you, I told you that we're going to continue to talk about stocks this entire week. I literally went over my entire portfolio so that you don't have to. And after seeing my portfolio on full display for you, you all asked me to go ahead and start to dive deep into my stocks. Now, I actually sold 3 stocks in my portfolio, which we will talk about later this week. And I've also purchased a new stock this week that we will also talk about. I put $1,400 into a new stock. I sold off about $3,500 in stocks, and I added another $4,000 to that portfolio. And again, if you stick around and watch the next couple of videos, you will hear about what I did with that money and with those companies. Now today we're going to talk about 3M, also known as MMM. Now, I used to own 3M, but this is not a company that I own anymore. And I'm so happy that I do not own it. And here's why. I wrote down 3M has been struggling over the last 5 years, only up 2%. In the last 5 years, I can't imagine, my heart would break in half if I had a stock for over 5 years that only performed at a 2% clip. I probably don't even need to read my notes anymore because I can just go on a whole rant. But I will say this. 3M, although paying a 3.87% dividend, that is a lovely dividend. I love dividends like that. So if you had 3M over the last 5 years, although you only had a 2% growth, you would have still had an amazing 3.87% dividend, which means you're getting that dividend every quarter. Now, here's what I don't like about that. Essentially, it's a glorified high-yield saving account. You could have got that same interest rate in a high-yield savings account. Now, during the pandemic, 3M was over $170 per share, and now it's trading at $130 per share. As a safety and technology company, there was no greater time than a worldwide biohazard. I'm sorry to say it, but that's the truth. And profits and outlook cannot be recreated to match or surpass the revenue made during this period of time. And so, you know, the problem with the stock market is that it's very volatile and people get their information right away. And so we're always looking forward and never backwards. You look at Amazon during the pandemic. We thought that they would slow down coming out of the pandemic with more people back to everyday lives and less people shopping online. But we saw that there was actually not a decrease. Maybe they increased profitability. They figured out new ways to innovate and grow. And people just got more accustomed to shopping online versus retail stores. And so we see all these retail stores starting to shut down. Even in places like New York City, where I'm from, it was like a desert going into the malls. I was shocked to see that. So Amazon was able to continue to innovate and continue to grow. However, 3M was not. Instead of promoting safety, health, you know, staying on top of your health, they just weren't able to really advertise that, promote that benefit, and really get people to continue to buy gloves, continue to buy masks, continue to They could have made it even a fashion statement to have masks on. We're coming into the fall season now and then winter. This is the biggest time of year where people get germs, bacteria, they start to get sick. And yet they're only up 2% over a 5-year period because investors are looking for more profit than the year before, more profit than the estimates. We want you to beat expectations, and that is relatively impossible right now. So for 3M, for them to reach $170 per share again is very unlikely. And at the time of this video, I want to say again that they are trading at around $130 per share. That is literally $40 less than their peak just about 2 years ago. So you tell me, if someone was holding that investment, would they be very happy with their investment right now? A lot of people are saying hold 3M, hold 3M. And to be honest, I can't blame them. At the very least, you own almost a 4% dividend. Sorry, not own, but earn a 4% dividend almost every quarter. And that 4% dividend, if you're smart, you would be diversifying that out into other companies. But ultimately, I just don't see it. I just don't think it's worth it to own 3M at this time. And so I'm happy that I sold it in 2019 and that I've never bought it since. Because even if I had had it during the pandemic, I probably would have held it way too long. And so I'm glad to have gotten rid of it while I was in the green. All right, that's really all I have for you on 3M today. We're going to talk about a lot more stocks this week. And these are some quick and short videos. But again, I just want you to all get a little bit of information so that you understand where the stock market is headed, what companies are doing to innovate and grow. Why are some companies struggling? This is really what I want to get across to you all today. If you don't like the shorter videos, let me know in the comment section down below, and I'll be sure to start making more longer formed content. Now, if you like this video, leave a like, comment, and subscribe to the channel. You know I post every single day at 8 a.m. daily on YouTube, Rumble, and Spotify for podcasters. And I can't wait to see you on the next one. Peace.